నమస్కారం. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం విద్యార్థులకు స్వాగతం. ఈ కార్యక్రమంలో
Hello viewers, the topic that we are going to discuss today is fundamental analysis for equity investment. This topic is selected from Security Analysis and Portfolio Management course. So this session is mainly useful for students who are doing MBA with finance specialization. What is fundamental analysis? Fundamental analysis is a method of evaluating a security. It may be a note or a share or a bond by investigating the intrinsic value of the business that is issuing the security. To enlighten us more about this fundamental analysis, what is fundamental analysis, what is company analysis, what is industry analysis, the procedure involved in it, we have Mr. Satish with us in our studios today. Welcome Satish for this lesson, for accepting to be a resource person. First of all, let me thank you for this. Mr. Satish, D.Satish, he is a faculty member, he is an associate professor with ICFI Business School, Hyderabad. So Satish, before actually explaining what is fundamental analysis, I request you to explain why anybody should analyze the equity security before making any investment.
Okay. So basically, why do we all invest in equity? We invest in equity because we want to make money. So what happens is, generally when I want to make money, I see to it that I buy a particular security cheaply, and then once the security price goes up, we sell. So primarily I am trying to identify whether the share price in the market is correctly priced or not. Sometimes what happens is, there are some sentiments in the market. Because of these sentiments, the share price may be valued more than how much it is. So that is where we call it as overpricing. Sometimes what happens is, the price of the share is less than how much you think the value is. So what happens is, in that particular case, what we say is it is underpricing of share.
Okay.
So primarily, if you are buying a share at a right price, you don't make money. You make money when you want to identify, like perhaps I want to make an investment. When I want to make an investment, what happens is, I see to it that the share price, I have to get in or buy the share at a cheaper price. Then I look for shares which are underpriced. That means the value of the share should be high, but at the same time the current market price has to be low. So I am looking at this mispricing of shares when I am actually trying to invest. When I am trying to invest, I have to buy low. So I am looking at shares which are undervalued, and then once the value picks up, what happens is, we sell the share. On this other side, let us say that I have already invested in the share, but then something bad is happening about the company, like let us say that the regulators are against it. So I think that the value which I thought it will reach is not being reached. So what happens is, the share price is coming down, or it is forecasted to come down. So what do I do in this situation is, I try to sell the share, because what I think is that the share price is overvalued as of now. So I am actually playing with the mispricing of share, and this happens because of various sentiments in the market.
How actually this analysis has to be done?
Okay. So primarily, what is fundamental analysis? Fundamental analysis basically, we are trying to identify the true value of the company. And what happens in this way is, we take the underlying principles or underlying values or factors which affect the price of this particular company or the share. So here we need to be very, very careful in analyzing. It is not that you go by what the newspaper or what the press has to say. You need to do a deeper analysis. Like for example, you need to look at a lot of things, both financial in nature, and like for example, go through the annual reports, look at the profit and loss account, look at the balance sheet, look at the cash flows. But on the other side, you also look at the qualitative factors, like for example, what is the competitive advantage of this company. Now why is it that the customers of this company are preferring this product of this company over its competitors? Now that will say that no matter what, whether the customers will stick to the company or not. So in that circumstances, what happens is that there is a great competitive advantage for this particular company, and this will be reflective in higher growth of revenue. So, in this sense what happens is you need to look at what is the brand image of the company, you need to look at corporate governance. Sadly in India, corporate governance is not is not up to the mark, and you've been seeing various lists of willful defaulters and others which are coming up. So, it is very important that the corporate governance and the management is actually is very transparent with the shareholders. Then only you think that the value of the share is really what it is.
Okay.
So, primarily the aim is that through fundamental analysis what we are trying to do is we are trying to analyze the intrinsic value of the share. So, I will come to that thing. Before that, I need to make a fundamental difference between fundamental analysis and technical analysis,
okay.
because both these things are actually used to value a share or value a share price. While fundamental analysis is looking at what are these underlying factors which affect the share price, like qualitative factors and quantitative factors, the technical analysis on the other side looks at the graphs and shares price movement in the past. Technical analysis thinks that the market price has a memory and then it repeats itself. So, at each time where the share price is, you look backward and you say, okay, the share price had a certain resistance at this level, or the share price is having certain support at this level. Then you find a lot of people in the business channels which says is if this resistance level is broken, then the share price will go to this level and others. So, technical analysis is basically a study of the share price movement in the past. So, it does not really look at the fundamentals like what is it that drives the company, it only looking at the share price movement. So, typically technical analysis is used when the share price is actually when you are making an investment which is of short term in nature. Whereas, when you are looking at fundamental analysis, you are looking at investment for a long horizon. Like for example, I would like to quote Warren Buffett, who says, I do not invest in shares, I invest in business. So, fundamental analysis is as good as trying to invest in business, because you are investing there for a longer period of time.
Yes.
So, that is basically it is, but ultimately the motive of fundamental analysis is to see to it that I find out the intrinsic value of the share.
Okay. So, you said that intrinsic value is one of the most important aspect which has to be taken care of. So, what is this intrinsic value?
So, typically what happens is we try to arrive at an intrinsic value. Now, what is intrinsic value? It is really very interesting that the market price which is being quoted in the market may not be the same as an intrinsic value. Intrinsic value would say, okay, given all these fundamental factors which affect the company, now how is the company going to perform? So, what happens there is sometimes because of sentiments, as I have already spoken, the share price is not the same. So, when you are valuing the company, like for example, let us say that you want to buy a company. Now, will you pay the share price of what is there in the market? Not necessarily,
not
because what happens is there might be a growth potential which is there, or there might be a, that the company is winding up. So, what happens there is we are trying to using the real factors, we are trying to arrive at the real price. So, forget about the market price, what is the price at which you are ready to buy this particular company. So, this is what is the trying to arrive at this value is known as the intrinsic value.
So, how to go about the fundamental analysis? Is there any systematic procedure to go for fundamental analysis?
So, fundamental analysis is a long drawn thing. It is not that you look at a share price and then you say okay, it is going to go up. So, what we look at is we have a top down approach which says either you first study the economy, then you study the industry, then you study the company, or you have a bottom up approach where you look at company, industry and economy. Typically most people use the EIC analysis. E stands for economy, I stands for industry and C stands for company. Now, the most important thing is why do we need to look at it like that? We need to look at it like that because any company is a part of an industry and any industry is a part of an economy. So, what happens in that sense is I cannot say that the company will be performing great if the industry is not doing well or if the economy is not doing well. So, what happens is it is generally seen to it that economy has an effect on the company, industry also has an effect. Like we cannot compare a software industry with let us say an iron ore or iron steel company. So, what happens there is both these are different entities. And that is why you need to see. So, here one more clarification which I would want to see is like let us take a software company, like let us take Infosys. Infosys is there in India,
yes.
But the problem is are you going to look at Indian economy to study? No, because most of its revenue comes from US.
Yes.
So, you are looking at US economies because if something happens or goes wrong there, the profitability of the company is affected here. So, going further because the world is getting integrated, you are not only looking at Indian economy, but the economy in which that company is based, but also a global economy which really has a great effect on the company's performance. Most of the companies, like let's take an iron ore company also. Why are the steel companies so low? Because the steel prices have gone down the entire world. So when you are looking at this analysis compared to last 10 years, you need to factor in a lot of global factors which are having an effect. So when you talk about economy, it is not necessarily an Indian economy, but you also give a certain amount of weightage to the global economy. So totally you look at the global economy and its performance, because in this current world there is no company which has which is immune or which is very much immune to only Indian economy.
So particularly they have to analyze the factors that were in vogue in those countries with which they are dealing with.
Yes. Yeah. That is the most important
thing.
Like for example, you take Infosys and you say I want to only analyze using Indian economy, it doesn't really work out.
Because when as you said, when there was a recession in US, most of our software
companies were affected at that time. Because their earnings are coming from that country.
Yes, sir. So I request you to explain this economic analysis, industry analysis and company analysis in a more detailed way. Let us begin with economic analysis. So what is economic analysis, and what are the various factors that have to be analyzed while doing this economic analysis?
A typical economic analysis talks about the economic indicators. So here we are looking at what are the factors which would say the economy is doing well or not doing well. Like for example, the first factor can be the GDP forecast. Yesterday economic survey was out, so it says that Indian GDP is projected to grow between 7 and 7.5. Now what is happening there is, we know that the Indian GDP is going to grow compared to global economies where the GDP is hardly growing, it's hardly 1% when you look at the global growth. So here we say okay, according to the forecast, but mind you, it might not necessarily come true. But the thing is, you are looking at a GDP of 7.5%. So you think that okay, the economy is reasonably doing well. Earlier projections were 8, we corrected it to 7 to 7.75. Then we are also looking at a lot of other factors, like for example inflation. According to the yesterday's economic survey, you are talking about inflation between 5 to 5.5%. Thankfully, this is possible because the oil prices are low. Otherwise, it is not. So how does it affect various industries? It affects various industries, who are the high consumers of oil, like our airlines. These companies would certainly do well because the oil prices are low. So what you need to do is you need to look at the economic factors and how it affects each of the industry and each of the company. Then you have a lot of other factors, like let's say monetary policy and money supply. So here we are also talking at interest rates. Now globally, slowly US has started to increase the interest rate, but I think going further the projections in India are that the interest rates will come down. If the interest rates are coming down, then it is definitely going to benefit the infrastructure companies who have taken a lot of loan. So what happens is the cost of borrowing decreases, or at least they are in a comfort level. But if the interest rates increase, then there is going to be a real great problem. So you need to look at it. The other one which they have forecasted yesterday is about the currency rate. We are somewhere around 68 rupees to a dollar. So what happens over here is they predict that there will be a problem with the rupee, slight problem, because looking at global conditions. So the government is looking that the rupee is going to depreciate. Now rupee depreciating is good news for all the software companies, all the exporters. It's real bad news for all the importers like our oil companies, where we start to import from them. So what we do is, when you look at the economy, that's how it goes. The other worrying factor is about the budget deficit. The budget deficit has to be as low according to global standards. So there is a commitment by the Indian government that we get it down to 3.5% of the GDP, but last year we had it at 3.9. It's really looking that it will be a challenge for the finance ministry to make it. Now what is it going to affect? How is it going to affect different people is that there is a sovereign rating done for every country, and if your fiscal deficits are going to be high or your budget deficits are going to be high, your economic there will be you will be degraded. So once you do the degrading, your cost of borrowing and others increase. So all these companies which borrow are really going to have that risk premium which is going to be higher.
How about industry analysis?
Yeah. So economy is not same to all. So there are something called an industry. So in industry what happens is it's the same thing. I cannot compare two different industries. So I need to be very careful about each of the industries. Like for example, let's say there is a regulation passed in Delhi government that all diesel cars above a certain cc would not be allowed. So definitely all the car manufacturers or automobile manufacturers who are depending on diesel cars, they are going to take a hit. So what happens is, what are the regulation, how is it affecting the industry? So these are some things which are very industry specific. They don't affect a lot of them. So, here the industries can be divided into various things, some of them are cyclical industries. So, what happens is as and when the economy is moving up, their stocks move up, as and when the economy is moving down, their stocks move down. Like for example, if the economy like automobiles, these are some industries, niche products, luxury goods, these stocks do well, but there are also other things like defensive stocks, like it's really not bothering whether whether the economy is doing well or not. Like for example, pharma and utilities like current and others, because we are having a deficit, we need power under any circumstance, we need hospitals and medicine, whether we are doing well or not. So, these companies will be doing well no matter whether the industry is whether the economy is doing well or not. The third one is a high growth industry. These are basically in the nascent stage and which are trying to grow. Most probably these are the e-commerce companies which have come like Flipkart, Snapdeal and others are very good examples of these industries. So, each industry needs to be looked differently.
So, the next segment is company analysis.
Yes.
So, how to go about company analysis?
Company analysis is a major part of this fundamental analysis. Here what you are looking at is you need to look at both quantitative factors as well as qualitative factors. Now, the question is, where am I going to get the details for the quantitative factors? They are basically available in the annual report. So, in this annual report you look at profit and loss account, you look at the balance sheet and you look at cash flow statement. You also look at a lot of other things, but these three things are the most important when you are when you are looking at the value of that particular stock. Now, where do you look at qualitative analysis? Annual reports, you have various other sources. Now, using quantitative analysis, you can arrive, you can do ratios. Now, in ratio analysis, it is basically you have some number on top and some number below. So, what you do there is you try to analyze, how the company is performing. You have various ratios like profitability ratio, like for example, what is the profits earned by this company compared to others. You also have various ratios like liquidity ratio. Liquidity ratio is very important for companies which have taken a lot of debt, because they need to be liquid in order to pay back the interest rate. Then you are also looking at leverage ratio, like what is the percentage of debt to equity. So, here what happens is higher debt to equity. One discriminating factor which is happening in our industry now is that highly leveraged firms are getting punished thoroughly. Because you have seen the banking sector in India, there is a growing NPA, and unless they recover these things, it's not really going to do well for the banking industry. So, what happens there is that these leverage company are being beaten down very badly, because they do not their debt equity ratios are too high, they do not have liquidity. The other one is the turnover ratios. Generally you look at various turnover, you need to turn over things fast, you need to turn over your inventory fast, you need to turn over your asset fast, so that the more the turnover, more is your ability to generate revenue and more is the ability to make profits. Then apart from this, you are also looking at something called the discounted cash flow approach. Now, this is very important. What you say is you project the cash flows into the future, into the forecastable period, and then afterwards what you do is over a period of time, I think this industry is going to go at 20% for the next 5 years, fine. Okay. So, you project the cash flows at 20%. Afterwards, I think it will grow same as the Indian economy, let us say 5% into the future. So, what you do is you calculate the value of your forecastable period as well as your your continuing value of the company, which is after the forecastable period, you get it down to the present value method, and I think this is what is going to be the value of the company. So, you need to start up from future cash flow of the firm, which is basically the amount of capital, cash flow available for all the providers of capital like debt and equity. Okay. Now, we are looking specifically at equity in our discussion here. Yes. So, here we need to remove all those things which go for paying for the debt holders. So, from taking care of the FCFF, which is the future cash flow of the company, we need to pay the interest and we also need to pay the principal this year. And so, once we minus this and maybe we want to borrow some more debt. So, you add the debt and then you say, okay, this is the amount which is available for equity shareholders. Okay. Now, the third important one which you need to look at is the relative valuation. This is very specifically important for unlisted companies. So, here what happens is you look at some of the ratios like PE multiple. So, if I say the earnings of this company is the same as another company, the share price of that company, the PE multiple is 40, and you think, okay, this will also be 40. If the earnings is 2 rupees per share into 40, you think it is 80 rupees should be the correct value. The second one is market to book value. So, you say that book value of this company, looking at the balance sheet, you think that the book value of the company is some 4,000 crores. whereas the market value is giving 40,000 crores. So that's a multiple of 10. So you need to look at the market value to the book value. The other one is the market value to sales also. Okay, if the sales is growing, you also think that the market value is growing.
Right.
So what you do when you do a fundamental analysis is basically you look at ratios on one side, you look at discounted cash flow on one side, you look at relative valuation on one side. So when you take all these factors into consideration, you give a certain amount of weight for each one of them and then try to arrive at the intrinsic value, which is nothing but the fundamental value of that particular company.
Okay, will you please throw some more light again on the qualitative factors?
Okay, so the qualitative factors play a very important role. First one is the corporate governance. So the management, whether it's transparent, it's very important. Again, we've discussed that there are a lot of promoters who want to become rich, but they really don't care for the shareholders. They do hide a lot of information from the shareholders. So one of the most important thing is how is the corporate governance in that company? Is the company transparent? Are they saying us what they are planning to do, or they are giving us, or they are hiding certain information? We have got great scams like Satyam. So we also have issues in in UB and Kingfisher and others. So you need to look at the corporate governance well. You also need to look at intangible assets, which is basically what is the brand value of this company and other. Now it's very difficult for a lay investor to look at it, but you should give a certain amount of weightage for that. Then we looked at competitive advantage also. Why is it that people buy Apple over Samsung? It's if both of them are having the same products, how do we do that? So you need to weigh all these factors before we come to a conclusion of what is the fundamental value of the company.
So how an investor can take a decision on basis of all this analysis?
Okay.
How will you please sum up how this analysis will help a lay person, as you said, to take a decision about investment?
Okay. So what is happening is we one of the sources, where do I get this information from? So this information is very important. You need to be very active. Now most of the companies are on the internet. Every company, according to your SEBI rules, should be having, which are listed, should have a website. So in the website, it is very important that you look at there's an investor page where you have the annual reports. So you need to look at the annual reports regularly. Second, what happens is you also need to look at the conference calls. So there's like quarterly earnings, and a lot of analysts and others will be invited. So there will be a lot of questions. Now most of the business channels are covering it, whether it's CNBC or whether it's NDTV Profit. So what happens there is you need to look at the questions which are being asked, because these analysts are well read. So what happens is they actually ask some very interesting questions, and you need to look at how management is actually answering those questions, because that will give you the real value of this particular company. So you need to look at a lot of these things before you make an investment. But always, some of the few tips are always invest low and get out of the share when it is high. So when your friend says I lost a lot of money, that is the time when you need to invest. And when your friend says I made 1 crore of rupees, I think you need to say no, this is not the time for me. But mostly people get tempted when their friends say okay, I made a lot of money, so they say okay, let me get in, but then that is the wrong time to get in. When your friends are making money and getting in, that's wrong, because you are buying the share at a very higher price. When your friends say I have lost all my money, that is where the share price has come down. So that is the time where you need to invest. That is the basic principle of fundamental analysis.
So thank you very much, Mr. Satish, for being with us and really giving a very useful information for our students and also to the general public. Thank you.
Thank you.
ఈ కార్యక్రమాలపై మీ అభిప్రాయాల్ని, సూచనల్ని, సలహాల్ని ఆహ్వానిస్తున్నాం. మా చిరునామా ద డైరెక్టర్, ఆడియో విజువల్ ప్రొడక్షన్ అండ్ రీసెర్చ్ సెంటర్, డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ, ప్రొఫెసర్ జి రామరెడ్డి మార్గ్, రోడ్ నంబర్ 46, జూబ్లీ హిల్స్, హైదరాబాద్ 500033.